our first interactive session during the year 2023, where we will be discussing the results of year 2022. I hereby hand over the presentation to Usama Qunibi, who is the acting CFO of the company. Usama, please go ahead.
Thank you, Mr. Youssef. So good afternoon, everyone. I would like to take you through a quick overview of the financial results for last year for our ORC parent and the group. And during this presentation, we'll go through the P&L balance sheet and our cash flow positions. And finally, we will close by any questions, and we can support you with the answers for that. So starting with the P&L for the overall parent company and the group, the overall results for the parent company, we achieved 7.8 million versus 9.6 million, and the group was improved from 6.8 million in 2021 to 7.9 million. For the parent, the key driver behind the drop in the results is mainly coming from the commodity prices, inflations, some inflation in our expenses, and this drop in our financial income coming from our interest due to the increased cost of funding. This is the key driver behind the drop for the parent company. For the group, the results have been significantly enhanced compared to the last year, coming from the enhanced result of our Algerian operation subsidiary, which is like recovered a lot of losses that incurred in 2021 that have been recovered in 2022 due to the enhanced operations. So we'll move right now to the next slide about the overall performance. So you can see here, this is like in summary about the turnover, gross profit, and operating profit. For the overall group, you will see the results all in the positive side. So our turnover increased by 29%, gross profit 16%, operating profits 25%, and the profit before tax by all 1.5%. For the ratios, EBITDA margins and net profit and operating profits are more or less last year is better a little bit. Mainly it's coming from the cost of depreciation that acquired during the year. And for the operating margin ratio, it's in line current year with the last year. And for gross profit, the drop is coming from the key commodity inflation prices versus 2021. For the parent company, again, there is an increase in the turnover by 11%, gross profit by 4%. The difference between the turnover and gross profit coming again from the commodity inflation prices versus previous year. Operating profit drop is by 11.7% coming from the increase in our operating cost. And for profit before tax, it's by 19%. Coming again, it's the result of our operating expenses cost in addition to the commodity inflation. For total overall ratios, this is a mirror reflection of the actual numbers that we have. The key ratio over here, again, it's our operating gross margin. It's dropping from 13% to 10%, and accordingly, our gross profit from 38% to 35.5%. From balance sheet and financial position perspective, our net assets have improved versus Yago almost 100 basis from 1.5 to 1.7. Overall, our financial positions, you can see our net total assets have been increased by almost 10 million, coming mainly from our stock buildup and from stocks and cash and cash equivalents by 5 million, and our stocks by 6 million. This is the key driver behind our increase in our total assets for the parent company. When it comes to the overall group, the same increase is coming from 130 million to 140 million. Again, the whole financial position, it's improving versus Yago in terms of the local operation in Oman or for overall the group, including Algerian operation. From cash flow positions, the net cash flow is the net results of the cash flow. As you can see here, the decrease is happening of almost 6 million Omani riyal for the parent company. Yet this is coming because of there is some investments happening in related to the deposits, increase in our fixed assets investments, capex, and the investment in our inventory by almost 6 million. So those capital requirements that needed for the year that have resulted in almost a drop in cash versus the previous year position by almost 6 million. The same has been reflected in the overall group. And this is finally the overall view of our results for the last year. So any questions, I will be happy to handle and answer. So no questions?
Hi, Yusuf. This is Aaron Haydari. How are you?
Hi, Aaron. How are you?
All good, thanks. Yusuf, can you give us some color on your CapEx plan over the next couple of years and sort of what that would go towards and how that would impact some of the CapEx that, how that would build up off some of the CapEx you've done over the last 12 months?
Our CapEx is primarily focused currently on building capacity where it's required in terms of our key businesses. We're in a growth phase, be it Algeria or Oman. Algeria with a high double-digit number, and Oman with close to double-digit number. So these are positive signs. So we're always focusing on whether increasing capacity or basically replacing our aging manufacturing assets. This is number one. Number two is we invest in digitalization. We, as a group, we are working on ensuring full visibility when it comes to our performance, our tracking, our inventories. So this is the number two CapEx that we're investing. Number three is increasing our reach when it comes to customers. When it comes to Oman, our reach is almost close to 100%, while in our Algeria business, our reach is still in the range of 55%. So there is a long way to go to expand that. So these are the three areas where we're focusing in terms of, actively investing on a CapEx, on things that have, positive, return on investment for us as per our assessment. The last thing is in Oman, we've also, we've almost finalized a solar and sustainability project. That project will enable us to produce between 40 and 60% of our total energy at the plant in Muscat. Did I answer your question, Aaron?
Yes, absolutely. Thank you.
Aaron, you were not able to attend the AGM. Any issue that happened during the connection?
I'm not sure exactly.
Okay.
Somebody was helping me with it from my side, but I don't know what the issue was ultimately. We attended, but I'm not sure if the votes got logged. But I don't think that makes much of a difference in the grand scheme of the results of the voting.
Okay. Any question, Aaron, that you have? Because you reached out to us some time back. Any question that you want to us to respond to or clarify? We have with us today.
I have
Usama.
a bunch. If no one else has questions, I'm happy to keep asking.
Yeah, please. Usama is our acting CFO with us today.
Oh, great.
Okay. So please go ahead. Any question you have?
You had made, so I was looking at the two subsidiaries, the two acquisitions. If we put Algeria aside for the moment and we focus on the smaller one, any update there in terms of the earnings power or what the plan is for that one? Now that we have a combined subsidiary financials, it's difficult to see what the actual performance of that was last year as a standalone, but prior to that, there hadn't been much earnings power there. Is there any plan on that? Any reflections on the acquisition and how you think about capital allocation going forward?
Look, Arabian Vandin, and this is what you're referring to, the
Yes.
Basically the coffee business that we have in Oman,
Right.
doing exceptionally well. I mean, growing in high double digit. A lot of businesses that are coming. We're divided into three channels. One is what we call OCS, Office Coffee System, and that's where we've expanded across. In the oil and gas, we're very much present. In the banking sector, we're very much present. In the remote areas where you have now gas fields and oil fields, we're also present. Then you have the second channel is Horeca, and on that also we've been able to partner with some significant brands in Oman. Number three is a vending, where we're expanding significantly. We're the largest vending operation in Oman, all categories combined, all businesses. So yes, the company is SME in terms of size, but the growth is extremely fast. And whether bottom line or top line, both of them are very healthy.
Okay, thanks for that. And then back to Algeria. It's obviously it's a big market, and we've looked at some of the market shares there, and it seems like the largest competitor is stable, and there's room to grow relative to some of the other smaller competitors. How much room to run is there with ABC? How much of the old market share that was given away do you think is achievable of getting back in the near term? How does that impact sort of the earnings power of the business? Is a lot of it just mean reversion, step one, and then step two will be more growth initiatives and starting to compete with Coca-Cola? Because we can see the acquisition price and we can see what the business did. Our understanding is that it's done much more in the past. So how do we think about that plan in getting through some of the issues in management that was part of the previous shareholders?
Okay, so we acquired the business in September 2021. During the year 2020 and 2021, the business has been suffering significantly. And the reason being that when the previous owner decided basically to let go that business and sell it to a third party, he has frozen any investment. So hence during the period of COVID, the business has dropped significantly. And the lowest volume reach was 15 million 8 ounce, which is 50% of what the company achieved, I would say 5 years back. So that's where we basically took over that business. So drop in sales, aging manufacturing assets, low performance of assets, a lot of people demotivated, high turnover of employees, and also high exposure to debt. Okay, given the fact that interest rates in Algeria is quite high. So this is where we took over that business. Now we took it from 15 million. We closed beyond 20 million 8 ounce in 2022, and then this year the results are extremely positive. So hence we are focusing on fixing manufacturing capabilities so that we don't lose sales opportunities. We're working also on recovering some of the distributors that we lost in the past, and also replacing distributors with very professional distributors. We're working on capabilities, so we've hired some talented executives to help us grow that business. And the share is growing. When we look at Canadian share, we're moved from something around 12% to 20% in the month of January. So very good numbers in terms of market share. Revenue is growing, and we've been able also to renegotiate our contract for raw materials, and that's also generated some significant savings. So we're very positive to the outlook of our acquisition in Algeria. However, we're very much dependent on commodities and dependent on other factors like currencies and everything. But our outlook is positive.
Clear. I think I understand exactly what you're saying. Can you? I think I missed. You said 12 to 20%. That was market share.
That's what we call Canadian. There are two market shares that you get from the industry. One is what the Nielsen market share. So that Nielsen is retail. So they go in retail and basically take from customers what they sold, what they purchased before, what was the previous inventory, what is now the inventory, and they calculate what is the consumption over that period of time. That's Nielsen. And then there is what we call Canadian. Canadian is basically Coke and us, both of us reporting ourselves to this basically company, and that company basically shares those numbers with between Pepsi and Coke. So our share on that has, for 1 month we reached 20%. So that tells you that there is significant improvement. So basically we're 1/5. Or if the pie is 100 between Coke and us, we represent 20% of that pie. So that's good.
Okay, that's clear. Thank you for that.
Any further question, Aaron? Any other shareholder? Any question you have?
None for me at the moment.
Excellent, Suleiman.
So yeah, if we don't have any other questions from anyone else, we would like to close the meeting. So I see that we have Majid, if he has any questions to us. Otherwise, we will close the meeting now.
Nothing from my side, Suleiman. Thank you very much.
Thank you. So thank you all for attending. Yes. So yeah, thank you all for attending today's session, and we look forward to meet you again on the upcoming sessions. And thanks for your contribution.
Thank you, everyone.
Thank you all. Thanks, Yusuf.
Thank you all.
Take care.
Take care.